Good afternoon and welcome to the end of day review for today. And today is Tuesday, August 20, 2024. So it's just the second day, second trading day of this week. And tomorrow we have low or medium impact news, which is the FOMC meeting minutes. And maybe we have some kind of reaction or volatilities tomorrow. I mean, not tomorrow, but the day after tomorrow, this Thursday PMI right there. The week before that, we have a CMI, right? CMI is have more impact on the price action than a PMI. Basically, the CPI is consumer side and PMI is the production side or producer side right there. Or we may have, some price action around Jerome Powell with the Fed chairman this Friday at 10. By the way, we are on week 34 of this year, and 1 year we have 52 weeks. And we are in this week right here, it's August 19, 23rd. And the week following after that, we're looking for the GP data on 29 and the PCA data on the 30. 29 Thursday. And then Friday gonna be BC data is similar to the PCI, but it's just a subset of the PCI data, which is related to inflation. All right, let's look at the setup we have for today. For today, we have a beautiful setup. If we recognize, basically we see that right here is the Utah swing. Utah swing at 9:30. You see that? The Utah swing. And you see it beautiful and take out the buy side liquidity or the high of the London. And here's the high of the previous day, right? We know previous day high right there. So they basically we have the buy side liquidity rate. I mean at the 3 times. One right here, it rate in the Asian, right one time, right second time in London, and then boom, it reverts right away, and then we're gonna see this pattern again. You see this pattern, just break the buy side, go down, break the sell side, and do the same, break the buy side and go down, break the sell side, and we did mark correctly this range right here. You see this candle on Wednesday, the candle at 1545. The last candle before is closed. I mean, similar right there, right? So this is the huge candle we mark it, and we see that it hit the liquidity, the sell side, which is the low. Very accurate right there. So we are on the right track. We start seeing we train our eye to see what markets wanted to see. Right there, beautiful. You create a double bottom right here. You see that, and boom, it got out. Do one more, and this candle right here at 11 is huge flip, and then you have another flip right here, and then boom, we did go long out here, and we set our target right here actually. Right here, but we chicken out. We take early profits, we chicken out, we should let it run. We make color trade, vanity trade today, but go out to this ICT setup for life. All right, here's the ICT setup for live, which is right I mean, today we don't have any opening gap, but we do see the Judah swing at 9:30 if there's a gap, but there's no gap for today. Okay, so no gap, then we see the Judah swing. Yes, one side exactly, which is the model one right there, the very typical model. If we combine that with a daily time frame, it gives us a very good. Basically, it rate the previous day high or low in this matter in Judah swing, and then boom, it go reverse. You check out the low of the PM right here, right, anticipated direction. Yeah, the high of the buy side equity or the low. Yeah, high low on the PM range, which is it happened today right there. So right here we map out, this is the PM right there. Actually, yeah, you see from 12:30 to here, wow, it did go there. You see that? It did go there, all the way there. But you know, M right here should be good for us already. You see that? So as you see, very accurate right there. We just saw that coming. That's why. You see, we saw right there. So and we noticed that the buy side liquidity it trade at least 1, 2, 3. So actually 3 times, not 2 times right here. It's actually 3 times. Yeah, it's 3 times. 1, 2, 3. 3 times it rate. It rate preferred day high right here. It's Asian. Yeah. Let's fix this one real quick. Let's fix that one real quick right there. Yeah, 3 times, not 1 time. And here's how we fix that. Right, we fix them. We say that right 3 times. So basically, you have a pivot day high, and then you have Asia. Okay, high, and then you have London high. Right, London, all of them is rate 1 time, 2 time, and then 3 time, right there. Yep, 3 time, and then the Judah swing at 9:30 right there, which is right after London high right there, and we target this level perfectly. And we look on the daily time frame, we see what? On daily time frame, we see that yesterday, huge move on Monday, then we expect a retracement for today, or reversal, or retracement. We want to see retracement on Tuesday. Basically, we have Friday and Sunday, not Sunday, we have Friday and Monday. Both of them is up close. Then we expect a reversal on Tuesday. So that is one of the, wow, what happened? Oh, come on. Basically, we make some change, and somehow it's not safe for us. We fixed this. If you remember, we fixed that, but I think we have to save them, I guess. Okay. So basically we say that the buy side liquidity rate 3 times. Okay. First we have the first level we have is previous day high, and then we have Asia high. And then we have a London high. So it's rate the previous day high, the Asian rate a London high, and then Asia high rate by London high, and then London high rate by Euro swing. Rate by Euro swing right there. Yes, so basically right there. You have it. Can we save it? Open it. Huh. What matter? Save it. Okay. Let's see. Yes, so it's better now. And we add one more error right here. So let's do this. So basically we're gonna add one more error right here. So it's a 3 times rate. 1, 2, 3 times. So you have 3 times rate, and then boom, you have a reversal or retracement right there. Alright, so basically we fix it so we have a perfect annotation right there. And we can see that right here we put a note. Let's put a note right there for our setup. So we have Friday and Monday, both up close day. Then Tuesday retracement or reversal is expected. That's what we anticipate. Or anticipated. It's so better. Okay, that's an idea. Here, so that's the condition, that contact we're talking about right there. All right, so and how do we know that? We just mark the previous day high right there and see the market is around at that level, and you see it's break at level again, then it reverses. Especially it break the buy side liquidity 3 times, then we have to put a trigger right here. I mean, no doubt we have to. Look scary, a little bit uncertainties, but somehow we have to learn to do this, and we have not to do that. Yes, so it's amazing that it's not saved. Yeah, right there. It don't save by automatically. We have to save it. So basically, Friday and Monday both up, close day. Then we're gonna see that Tuesday is anticipate. Yeah, Tuesday retracement or reversal for that matter, because the retracement can turn to a reversal. But today it's just a retracement. Is anticipated. Alright, let's go with that focus right there. You know what? You have to hit save other way, not cast save first. Yes. Ah, oh, come on. Let's check again. Okay, so right here is save first. So we have a no very good setup for right there. So just review right there. ICT say it's the model one right there. Yeah, that's just is the beautiful model one. Let's add a little bit right here. Model one. That's the reason why ICT give this a very first model. All right, how we? Oh, yeah. All right. Should be okay. All right, model one right there. Let's save it. Oh wait, not save first. All right, let's see if we have. Oh, we need. Can you believe that? It's not there. Oh yeah, right here, model one. So we have perfect right up for that model. Let's say we have some of them in the past. Let's see. Template model. Yeah, here's the model we have last time. Last time we have is July 1st. You see the pattern right there, the open, and then the Judah swing. Boom, it right there, the buy side, the sell side. But the interesting that wow. The interesting that the Judah swing at 9:30, it didn't rate the London at all. Just failed to rate. The reason why, because it had a failure gap right here, and it refilled the gap, and then it kind of refilled right. Yeah, you can see that it refilled right there, and then boom, it went down. So we have Judah swing 9:30, and we see the setup right here. Right, we have break and then reverse. Okay, let's look at the one we have for today. Tuesday. Yeah, this is the one we have for today, but let's delete this one for now. Yeah, this is the one we have to. So from now on, if we do this model, we try to put a reference on the daily time frame rather for the model, so it helps us to see better the context. Okay, similar right here. So right here you have a 9:30, perfect right here. You see that? So the condition is perfect. I mean, today's is more perfect than this one. This one, you see that the buy sell liquidity, it rate only twice. 1, 2. Here's the Asia, right? As Asia, and London did not take out the Asia, but the swing at 9:30 take out the Asia and the previous day high right there. So the liquidity only the buy sell liquidity only rate twice, the previous day high and the Asia. But for today, it rate twice, 3 times. Okay, here's the real time we have. So here in the real time, you see that you see the hue moved out, boom, right? Boom. But what? Wow! As soon as it rate the buy side of long time, the 9:30 coming, it flip right there. You see, flip very quick. You see that? Boom, boom. So just within first minutes, you see a huge put right there. Boom! Wow! Boom! Who thought that it's gonna be reversed from here? If we're not familiar ourselves with this model, ICT model right here, there's no way for it to pull the trigger or to do it. But if we study this model well enough, it's become our second nature. Then we have to pull a trigger right there, put a buy, a sell stop right there. That is our shot. We see that wow, just one candle it go down and rate the buy side of that right away. By the way, we are not in. Are we? Yeah, we're not in our front of computer at that moment. We have other things to do. So, boom, you see that? Wow, it's go all the way to this low, which is about ourselves right there. See that? Boom, and then it reverse. I have to get away. No, it not reverse right away. Boom. Yep, we see that right there. So right here, we see this movie before. We thought, okay, it's break, first leg down, and then a gap, fill the gap, then I make a second leg down. When I make second leg down, we thought it's gonna go deep, but look at this. That's where when we watch in real time, this guy flipped it. All right, so they 12:30, 12:45, and then 1 o'clock is flipped. The 1 o'clock is flipped right here. Yes, 1 o'clock, which is 30, it flipped. Yes, that flip right there. Yes, you see the flip? And then don't go in right away, like give another, just see another flip right there, and look at this one. Boom! You see that? Yes, right here, we thought it gonna be a necklace down, but it flipped. It flipped, and then we need to go all in right here and target at least right here. That's what we did. We did target right there, but we got a little bit chicken out. You will see that when we review the trade. When we supposed to stay in the trade, a little bit chicken out, we get out right there. We make mistake. We see like run a little bit right here. You said boom, right there. That's our target, and another take target should be right there, and boom, it take out those 2 targets right there. Yeah, let's review the trade that we took. We have an idea. So we have about 6 more minutes. Let's get this done and then we get out of here. Alright, it's the very first trade we take, and right here is right before the 9:30 open. We see the opportunity right here, so we want to try out. Well, so the idea is that we see the fair gap right there and the refill. After the refill, we believe that it's gonna come out and take second leg down, but we live at 90. We thought that okay, it's gonna go out of why here. No, we learn our lesson. You have to put at the buy side liquidity right here. Sell side, I mean the low of this and low. We didn't do it right. You see that? It right there. Boom, perfect. We should get out at 150 something because it the sell side right there. And you have to keep in mind that the 9:30 is gonna be very volatile. So we have to check quick profit right here and get out. But it's a lesson learned for it right there. We see the opportunity, but you have to see them right away with the very precise target. You see that? We move to break even. Come on, we need to break even right there. We should get out right here. Get $187 profits because the very low hanging fruit is the buy side, the sell side, or the low of this London right there. Boom. And we didn't take any profit. You see it was 200 right there. That's a good profit right there. But look, we didn't take anything. We thought, wow, it may go down all the way here, but we a little bit naive. And when you see that the 9:30 come, boom, we just I think we just close the trade. Did we? Let's see what should we do. Let's see if we close the trade or we let it. Oh yeah, we moved the stop loss right there, and you get hit. Yeah, we're thinking close the trade, but at the same time we debate ourselves. Let's see if it's doing what it hit our. Yes, so yeah, so we have to when we trade right before the open, it's kind of very tricky. We thought that it's gonna follow through, but it do not follow through. It make another rate buy side liquidity before it make a second leg down or a next leg down. Yeah, that's our first trade right there. Let's look at the trade right here. When we mix right here, we see the flip right here, and we mix I think at right here, which is this trade at 12:30 1 p.m. 30. All right, here's the flip at 1 p.m. When we saw this flip, you already see this pullback right here. It flipped right there in this the low of this candle. We know it's gonna be long, so we go in right there, and
order filled.
You see, we just start with one contract, and then boom, we add boom, we add another 10 right there, and it going our way, perfect. All right, it go our way. We stick to a little bit up and out right there, but eventually go away. Okay, so the trick is right here. We need to stay in the trade at least 2-3 candle. We're a little bit chicken nuggets right here. We chicken out right here. You see that you see that got 60.52. We have 4,500. It hit easily. It hit right there, and then it go hit another level right there. But we see the pullback right here. We get a little bit nervous. So that's the lesson learned for us right there. I think we just close out the trade. We take you see, yeah, we close the trade. Look. We're thinking about just take off
order filled.
Couple of them, but we got panic. We just want to take off. You see that? We should let it run. You see, if we let it run, we get exactly 4 4,000, right? And then if we let it go right here, we have another 5 points, so we have another 2,000, so we got 6,000 right there. So right there. So basically we go in right here, we should let it run at least target right here, target right there. But anyway, we run out of time. We thank you for your time and interest. We're only grateful for this opportunity. And we do what we love, such coming our way. Bye for now and have a great evening.